Hello, welcome to episode 3 of the Geek and the Guru podcast. This is Brian Lee, the test geek. With me, of course, the incomparable Guru, Dean Tinney. How you doing, Dean?
Doing great. Looking forward to episode 3. What a journey
I
we've been
like
on.
it.
What's our game plan? We're doing 5 of these, right? For the 65?
We are doing 5 episodes.
You were thinking we might do a 6 to update the new content outline, or were we thinking about an episode 6 perhaps?
We will. We have just thought about that with the new recent announcement of the updating of the Series 65 and the lowering, yay, of the passing score to 70%.
June 12th.
So June 12th of 2023, we are thinking about adding episode 6.
And let us know in the comments what you think. If you want an episode 6, let us know in the comments, and maybe we'll fire up the Geek and Guru podcast episode 6 as it relates to 65.
To be honest with you, Dean, I think it's a pretty done deal.
Okay. All right. We won't make them big.
Exactly. And you know what? The rumors are already starting to fly about this. Oh, they're going to make it hard and doing this. And, so all the rumors start to fly already.
There's urban myths out there. And so Brian and I were talking.
I love it.
Beyond a paid supplement, which 65 screams that you need a supplement. But the other thing I think it screams is you need confirmation of what is really true and what are urban myths. So
that's exactly right. So for episode 3 this week, we are going to cover the client recommendations and investment strategies. Now, this area of the content outline for Series 65 is kind of a potpourri. It covers a lot of different stuff. And again, as Dean just mentioned, if there's any exam that screams out for an exam supplement to kind of cut through all the haze and the maze of those textbooks, the Series 65 is definitely one. So, obviously in our podcast today, we're not going to be able to cover every single item on the client recommendations investment strategies. We're going to take a 30,000-foot view of this. But also the ones that I love, of course, are always the trouble spots, the sticking points that a lot of people struggle with in any of these sections, including the client recommendations. So the first section we're going to take a look at is the market theory. It's been on the test for quite some time. Dean, your thoughts on market theory in Series 65?
Well, on theories in general, I always tell people, Brian, that theory is not truth. Theory is just a way of explaining things. And the more a theory can explain, the better that theory is. It's informative. It doesn't mean it's necessarily true. So don't fight whether you find the theory to be true or false. That's not the point. The point is, does it inform decision making? I don't want to sound like a kiss ass, but we got to remember what the North American Securities Administrator Association thinks. And they think the theory is informative, and therefore they're going to test you on it. The other thing I add, Brian, is I tell people nobody expects you to be a modern portfolio theorist in practice. There are men and women who have PhDs in modern portfolio theory, and that is not the point of your 65. It's, I think, more of or can you be a reasonable intermediary between the dreaded math men and women and the customer? So that's usually what I say.
Exactly. This is also an area where I'm going to start talking a little bit more about the textbooks and the textbook publishers. If any of you have been through my video courses, one of my introduction videos to almost every class is, of course, my origin, how I passed the exams the first time. All I had was the textbook. Of course, I walked uphill 6 miles to the one-room schoolhouse, all that kind of thing. But, I had to go through, 600 pages of text, of which 40% of it never shows up on the exam. Even some of the content that does show up on the test is presented a little differently, sometimes a lot differently than the way it's presented on the exam. Case in point, in the market theory, the CAPM, capital asset pricing model, a lot of the textbooks, I don't know a textbook publisher who doesn't include a math formula for the CAPM theory, which is all well and good. It's not wrong. It's not wrong material. It just doesn't show up on the test. It's not a math concept. Essentially, and Dean, I'd love to hear your thoughts about this too. It's oftentimes about a customer and their rep being rational about the type of return they're looking for and the risks associated with that type of return. Very quickly, if you're looking for above average returns, and who isn't, right, then you have to be rational about being more comfortable about risk. And a lot of times I'm not a big social media guy, especially when it comes to these tests, but the sometimes forays into social media, I get criticized a little bit about the lack of my math concepts as related to the test. And I said, there's one reason for that. It's because it's not on the test. Why put our students through that when it's not going to show up on the test? And again, that math formula for CAPM is half the length of your arm.
Yeah.
And again, it's really about rationale. Your thoughts, Dean, please.
I'm with you, Brian. I mean, it's tough sometimes. I gave Brian, he was kind of cracking up because unbeknownst to Brian, I put a banner up talking trash about textbooks. You should know that was me that did that mistake. But the problem, I think there's a couple problems with it. I had a guy who took his 65 who was a serious math geek, and I mean that in a good way, not a derogatory way. He said, Dean, I don't want to waste your time and that I'm paying for in tutoring to do any kind of math because I can do all the math already. So I think there's a part of the test taking community that loves math, embraces math, and it's not a waste of their resources, but there are a certain amount of people who, and I was just telling Brian before we went live, I just spent, I charged $225 an hour for tutoring, and this person wanted to talk about something that I know is not on the test. It was CAPM, and wants me to, walk them through how to calculate CAPM. Now, Brian's a little more aggressive. He tells me he just refuses to do it. And I'm kind of like, I don't mind showing it to you, but I think I call it the cherry theory, the cherry and the pits, right? You want to pick 65 cherries, the points that are easy to get, and there's lots of them. And I call CAPM a pit, and we should spit it out. And, we take a bite and spit it out. And part of that's operating from abundance rather than scarcity, where we're feeling good about our scores. But I do find there's a certain amount of people that are drawn in to this, this stuff, this esoteric stuff, that even if it is there, we were just talking about a multiple option strategy. Somebody said they encountered, and we both had said, well, maybe they should just be a sign of the universe, move on, because it's not worth the time and devotion. I feel the same way about CAPM. I wish I was a little more aggressive like you, Brian, just saying, no, we're not going to do it. But your point, the books not only do it, they do it at a level that makes you think it's important. Otherwise, why would it not be in my book and I wouldn't get questions?
That's exactly right. So sometimes, as you know, we have to be a little forceful in saying it's not on the test. If it's not there, I don't care about it. And folks who are reading through this and doing practice questions on it, they're being diligent, they're working hard. I just want you not only to work hard, but work efficiently. If it's not on the test, let's not go down that road. And I got to be honest, I love math. I oftentimes tell people I'd love to have this thing 130 math questions, because math to me is not ambiguous.
Yes.
Like words are, right? And
Yeah.
all the synonyms that they try to trick us with. So, it's not because I don't like math, I have an issue with math. No, just the opposite. It's all the other folks that I deal with that have issues with math, and the fact that it's not on the test.
And if they're going to do math, you probably know this, Brian, but statistically, the best test takers are people who love math and hate math. If you're apathetic about math, you're typically statistically not a good test taker. I am the opposite. I find it incredibly boring that 2 + 2 is always 4. I just find that boring, but we got to be able to do it. I like to talk about things like, what is beauty? What is truth? We have a couple beers, we get closer to what it's not. That drives math people kind of bonkers a little bit. But as I say to the people who fear math, they need to, make sure they can do the arithmetic, working capital, current ratio,
Right.
The math that we know is there, and you will get a point, and it's a point and play. So I think neither of us are saying there's no math on your 65. We are saying there are rabbit holes that test prep vendors send you down, like CAPM, which is not a good use of your time and resources.
Exactly. Exactly. Another very common market theory that shows up on the test, of course, and I get a lot of emails about it as well. Sorry, here I go again. I'm going to start railing on the textbooks again. Efficient market hypothesis, where they always correlate it correctly. The concepts that they're presenting are not wrong. The only problem with it is it doesn't show up on the test. And that is the correlation between the different levels of the hypothesis and how it correlates with fundamental and technical analysis. Those two terms are never associated on the test with efficient market hypothesis. Did I say never, Dean? I think I did.
You said,
Maybe that one might have been a little strong. No, it's not. It's not on the test. I don't care. Why is it in the textbook? So what do you think? What do you think about the efficient market hypothesis?
I think you're definitely going to get tested on it. There is
no
definitely
doubt. Yes.
high probability that you're going to get one or two questions. I told
No
Brian,
doubt.
what I try and do is start and work my way backwards with strong and say, okay, strong means nothing works, and then work my way back from that rather than going from weak to strong. And then, we did, Brian, I'm with you. There's people that get in the weeds about, technical and fundamental analysis. And is that semi-strong? Is that weak? More often than not, it's strong form by an index fund. It's kind of the way I say it.
That's right.
Or random walk. But how do you present weak versus semi-strong versus strong?
I love that thought, Dean, that you just mentioned about going from strong. You know what? I have to admit, I usually do it the other way, start with weak and then work my way up. I like that, though. Let's start with strong. To me, I believe the question is far more linear about what components are included in the strongest form of a hypothesis, such as including both private as well as public information. And of course, they may include some examples of either of those, right? Financials from the corporation or public information. Impending mergers and acquisitions would be private information. I think it's more of a linear question asking about the components of these different levels and has nothing to do with fundamental and technical analysis. It really doesn't.
Yeah.
That's what I believe. And that's how I teach it.
Yeah, I think it's a separate issue about technical and fundamental analysis, and
it certainly is. You're right.
How you do that. I always say too, Brian, that people, like we said, theory isn't truth; it's just a way of explaining things. Hypothesis isn't truth either. So I sometimes tell my brother and we get into it, and he's got a hypothesis about a certain current event, and I have an hypothesis, and they're different. I said, Chris, maybe we're both wrong. We don't know. It's a hypothesis. I like mine better because it forms me a little better, and you like yours, and who knows? We both could be wrong for all we know. So a hypothesis is just that. It's a way of explaining things. And then the other way I sometimes explain it is to, use like Mr. Buffett, for example. What is a strong guy would think that there's no way he could outperform the market, for example. Private information, I like Brian's thing. So material, non-public information, private information under semi-strong would work, right? Because you've got access to, that's what, by the way, pisses me off about it, because I've actually sold a stock not knowing there was a merger. Had I known that, I would have sold, right? So right. I get upset, Brian, in class when somebody, well, who's the victim? I said, well, it's the victim who doesn't have the information that you have, right? So.
That's right. So again, it's for test purposes, a strong correlation between the different levels and those components, whether it includes private information, whether it includes public, or both, or neither. And right. That, to me, I think is a much simpler linear solution to these questions on the test than including technical and fundamental analysis and those sorts of things. Right. I really do.
And people do get challenged. Sometimes the test prep vendors, we're not in the bash. You need a test prep vendor. So let's be clear. You need to buy a paid study materials. But that being said, I think there's practice problems. Take them in the weeds too, Brian. They have Absolutely. These questions where your point, they're making them to distinguish between technical being fundamental and then another test prep vendor has that hypothesis twisted a little differently. You have a practice question that I always tell people just call you about, but you have one on efficient market hypothesis. And people call me, well, my test prep vendor. I said, well, I'm not here to,
I know which question that is. Yes.
Yeah, the test prep vendor. I said, but Brian would love to talk to you about it. And remember, in Brian's practice question, he's trying to emulate or simulate what you can encounter on the exam. He's not trying to kiss butt with a test prep vendor. So I think their questions also. We'll stop talking trash about test prep vendors, but I think the questions also lend to the
You might. I might
yeah,
not.
yeah. The questions lend themselves to this confusion as well. So it's not only the
That's right.
the textbook; it's
That's
then the Q bank that backs up the textbook.
Right. And for fair disclosure as well, my motivation always is to kind of bring that content level down a little bit. My mantra, right? Keep it simple. Stay with what you know. These linear correlations are going to get you so much further on so much more of these test questions, the actual ones, the real ones.
Right.
That is going to lead to better success. That is my whole philosophy. And you're absolutely right. I would not take a test without one of these textbooks.
Yeah.
But also, you have to understand that they must get paid by the word.
And I also tell you, Brian, too, just to reinforce what you said about the real test. Can't tell you how many times I'll tell somebody not to worry about it, and they'll send me a practice question from a test printer. And I say, listen, I said the real test. We're not talking about practice questions from vendors.
Right.
We're talking about the actual test. So when we say worry about it or not worry about it, it's not in the context of a practice question. And if you find a practice question that contradicts the geek or the guru, that isn't, wow, I got them. It's not a gotcha moment. And I feel like telling people, well, wrong testing attitude. It's not a gotcha moment because we're not talking about your practice Q bank. We're talking about the actual exam.
Exactly.
Always.
Exactly. The third market theory, modern portfolio theory. I happen to work for an institution that were very big proponents, and they use that to create fund of funds. And so it's an area that I'm pretty intimate with, and it does show up on the test, no doubt.
Did you say intimate with?
I'm sorry.
Did you use the word intimate?
I did indeed. They were intimate with the modern portfolio theory. That's right.
Funny. That is funny.
Their portfolio managers were big modern portfolio theorists.
Yeah.
Is that intimacy? Anyway, what are your thoughts on testable content for MP?
Well, I don't know. It's always fun to try and figure out what bucket or basket you're going to put things in. I definitely think this idea of negative correlation is definitely testable.
Yes.
I usually use something like I have lows in your portfolio. Have I added additional diversification, but Home Depot in there? Probably not. So in terms of the negative correlation and the efficient market, again, I wouldn't go too far in the weeds, but there's a couple items there that I feel like people should be prepared to be conversant in, not intimate. They don't need to be intimate, but conversant. I'll say conversant.
Oh, come on. Let's get intimate with this stuff.
What do you think, Brian?
I agree. I don't usually use the term negative correlation in relation to modern portfolio theory.
Yeah,
it certainly works, no doubt.
How about beta and alpha? Would you put that in there?
Not with MPT, no.
Okay, what would you put with it? So
different asset classes to maximize return based on level of risk.
Okay.
I mean, it's a definition of the theory, is it not?
Right. It is. And then do you go into the idea of risk prevails despite diversification, or
No, not under MPT.
Okay.
That I cover in different areas.
Okay.
I actually do illustrate the efficient market hypothesis.
Wow.
Even though I know. Wow. I'm sorry. The efficient frontier. I'm sorry.
Yeah. Okay.
I illustrate the efficient frontier.
The Northwest.
Yes, quadrant? I do.
Oh my goodness.
I'm getting intimate with the modern portfolio theory. That's right. And I even addressed them. I said, you probably won't get to this level on the test. The term efficient frontier may show up.
Okay.
Only that it's connected to the MPT. Again,
do you bring up the Sharpe ratio at all, Brian?
What's that?
Sharpe ratio. Do you talk about the Sharpe
Not
ratio?
Not with MPT, I don't.
Okay, no. So you got it. This in a separate bucket.
Yeah, exactly. Those are all separate buckets. Okay. Negative correlation, obviously, that's a testable question, no doubt. Sharpe ratio, it's a question, no doubt. And in the real world, that stuff all kind of mixes with MPT. Yeah. Absolutely, no doubt. But for test purposes, one bucket here, one bucket there. So again, for me, modern portfolio is maximizing return through different asset classes. Of course, that's where the negative correlation comes in, right?
Right. Maximum return with minimum risk, right? Nirvana.
That's exactly right. That's it. So those are the market theories, the three that generally come up. On the test overall, probably any two of those, maybe three of those three different. So you might get two efficient market hypotheses, one modern portfolio, or one CAPM and one efficient. So any kind of combination.
Again, not enough to kill you. Not
Exactly.
When
Exactly.
you tell us you've missed the mark on the 65 because of market theory, we're going to say, I'm not so sure about it.
The average is probably two questions on market theory. That's right. Okay, another area, and again, this is kind of a large content area. It comprises many different aspects, is the investment management and strategies. We can get into the differences between strategic, tactical, buy and hold. And I will say this. I will be more than happy to say this. The textbooks do a pretty good job with that stuff. It's pretty easy. It's pretty match, correlate, lineate, match those figures. They're not too bad with some of those. Some of the areas that they might get a little bit nasty on might be some of the other things such as diversification, dollar cost averaging. There's kind of a nasty little dollar cost averaging question that can show up where they give you a table of numbers and ask you to compute the average cost versus the average price.
Yeah, I always say there's three test questions, right? What makes it work? Fixed dollars invested regularly. What's the end result? You end up with a lower average cost of the underlying shares, and then we don't say it guarantees a profit. I would tell you, Brian, I usually do this, and I'd be interested in terms of your dreaded math. When I go over the median and the mode and the range, and I don't know if you think that's testable or not, but I say, listen, I would be prepared to do a simple average as it relates to dollar cost averaging. So I find that people encounter that math, simple average math, as it relates to dollar cost averaging, more than like a standalone question about what's the median or what's the mode or what's the range, or,
Again, for me, those are two different buckets. But the dollar cost averaging, where they give you two columns, and as you know, Dean, there's actually three columns you need to calculate that stuff. But it all comes back on the definition, right? You're investing this fixed dollars at different prices, which lowers the average cost per share versus the average price. That's the definition.
Yeah, you're buying.
And if you rely on that definition, the math actually becomes easy, because the four choices, average price, and the average cost will have to be less than.
You're probably going to hate this, Brian, but I always tell people who are fearful of math, if you can't remember what to do, divide. And if you can't remember what to do, take the first number divided by the second number. So division is definitely more testable than other forms of math, for sure.
You know what I tell people? I said, these exams are not about math.
Yeah.
They never have been. Even the Series 7. Again, this is someone who likes math, which is every question was a math question. They're not about math. They're about concept. What's the concept of dollar cost averaging? That your average cost per share is less than the average price. So if they do bring up a mathematical question, remember that concept. The average cost has to be less than the average price. That's the important part about that.
I call it the output. If you know that about the output of the math, then you can short circuit doing the math. You can. I use that too, Brian. Like in the split, I say before you do the math on the split, assuming it's a forward split, you got more shares at a lower price, so you can just shop the answer set. You're done.
How many different tests does that appear on? Right?
You
just know that concept. It's not about math. Right. It's not about getting a calculator out and pushing buttons.
Even yesterday, I was helping somebody. We're doing our next episode, bond and bond yields, and I was trying to explain the idea that if you know that relationship, a lot of times you can simply shop the answer set, and you don't get bogged down in doing a bunch of math.
It's about the concept.
In fact, I think, Brian, they should probably take a strategic pause before you do some math and just look at the question again and say, like you just said, right? Okay, this is dollar cost averaging. Before I get myself going in the math mode and grab my calculator, let me check it out.
See, Dean, you are so more rational than I am. I get so emotional about this. What you just said was $1 million statement. If it appears to be a math, go back, sit back, look at it. What's the concept? boom.
Yeah.
Because that of course, that's what I tell people, but I'm yelling and
Well, you're the math guy. I got to tell you,
all over
Brian,
the
you're the
place.
math guy who says you love math. I'm the
I do.
opposite. I don't. And so I'm always looking for a hack. If there's a hack available, you probably appreciate this. We were doing a live stream and I told somebody that I don't like math, but I said, I know some very bright math guys. One of them has made tens of thousands of dollars from Dean because if the math is important, it's, like a buyout or something like that. My guy was Lee. And I would pay him and know that my math is going to be as good as anybody on the other side of that table. And this guy live stream goes, well, you shouldn't be in this business if you can't do your own math. I feel like saying, listen, my friend, I've been blessed. I know a lot of billionaires who don't do their own math, and some of them are still math challenged. They still were able to make $1 billion.
That's right. Yeah, exactly. That's exactly right. It's interesting. We could do a whole episode.
Yeah, we probably should do an episode on
math anxiety,
math
shouldn't
anxiety.
we? It's amazing. It's amazing. So those are some of the investment management and strategies that you can expect to see on the test. Again, the portfolio management styles, the growth versus value, the strategic versus tactical, dollar cost averaging. Another one being, of course, the sector rotation.
Yeah.
And again, these questions are randomized, combined. You might get 5 of them. Strategic versus tactical, growth versus value, dollar cost averaging, diversification, sector rotation, and of course, whichever draw you get from the test is going to determine which of those 5.
Yeah, and as we said, we got to give our test prep vendors some love there. We said
exactly, they do pretty well
when we plan our podcasts, even backstage when we're planning podcasts, we say, well, we don't want to do things that we think the test prep vendors do a good job on because you're already going to have to wade through those textbooks already. Right. And, those things that they do well, like we'll give them their kudos, their accolades and say, and the things we think that they unnecessarily complicate, we'll call them out on that as well. But this is an area where I do think you are in good shape with your test prep vendor, whoever that may be.
Exactly. Absolutely. Absolutely. So the next area we want to take a look at, again, probably another 5 to 6 questions in total, are types of accounts. Now, the first thing I would have to say, and I'd love to hear some of your thoughts, Dean, there are a couple of questions pertaining to which accounts may avoid probate, the estate process. What do you think?
I think that's important to distinguish. And then the consequences, besides avoiding probate, the other thing is you definitely need to know death in general, I guess I would say.
Death in general. Should we know it intimately or not, Dean? I don't know.
I know death intimately. What I mean by that is, the difference, for example, between joint tenants with rights or survivorship and tenants in common.
Exactly.
What happens to the decedent's share.
Right.
So I would call that death consequences.
Knowing death. Yes.
Knowing death.
I like it. Yes. Those two are the perfect example. The joint with rights of survivorship, of course, does avoid probate. The tenants in common does not. These are really traditional questions, have been around there. If you're new in this industry, these types of accounts are probably new to you, but if you're in the industry, they're very common, that we will get used to once we start doing our business, if you're not already.
That's exactly right.
And any other account that has a named beneficiary.
Are you thinking, let me just put up what I think it is in a banner that you're going to be talking about, transfer on death? No?
Yeah. And again, depending on how it's mentioned in the test. Okay. How many people have ever heard of that one type of trust that shows up on the test?
Oh, are you going into your remainder man thing?
No. No. The old banking, they used to call it a poor man's trust.
What is it? A simple
Totten trust.
Oh my God. Oh geez.
Have you ever heard of that in the real world?
No, I haven't. If you tell me, I don't even cover it anywhere ever, but you've told me it's there. Well, how do we spell Totten? Tottn or Totten? What is it?
Totten, Totten. Yeah, Totten trust.
Yeah, I don't even cover it anywhere at any time, but
which is today's TOD.
Oh, there we go. Okay.
That's what
I just refer to. I just bring it up that way.
I guess my biases show through. I think it's an old 60s banking term. I think it's where it comes from.
Well, the NASA, NASA is some of that stuff comes from Ozzie and Harriet and the Nelsons and the
No kidding.
50s,
My
50s and
goodness.
60s. That language is pretty arcane as well as some of this vocabulary.
Especially that taught and trust. But
Yeah.
again, it's essentially the TOD and slash POD. They all mean the same thing,
Right.
right? So those would have a beneficiary. They would not go through probate as well.
Mhm.
Retirement qualified plans, right? Death benefits and life insurance. These all have named beneficiaries. None of those go through the probate process. The only other types of accounts that typically show up, of course, are the educational plans, the 529s. Did you ever open up a Coverdale for a retail customer?
In fact, the way I teach it, and I always say that they're going to ask you to contrast a 529 and a Coverdale, and the Coverdale always is the loser. So,
That's right.
basically,
That's right. It
you're
is, isn't it?
supposed to be able to say the 529 is the winner. Now, I have every once in a while somebody, Brian, who takes exception with that and calls me out and says, okay, if you want, I'll do the laundry list of why the 529 beats the Coverdale.
That's right.
But yeah, I think they should expect a question on 529s versus Coverdales.
Absolutely.
And, 529 is the winner. $2,000 for the Coverdale, for example,
Right.
where you can put a lot more in the 529. I'm sure there's a couple points that you can front load it for 5 years with the wooden gift tax.
There's also a classic one. It's not a versus. It's not a 529
Yeah.
versus Coverdale, just a straight 529. To me, because I recall, and I guess I'm dating myself. I recall when the 529 first came out.
Mhm.
It was pretty much to counter the UGMAs and the UTMAs,
Yeah.
right? Because those are all irrevocable gifts where the 529s
It
are
reaches the
not.
age of majority.
If little Johnny or little Mary
Yeah.
ends up going down the wrong path in life, they don't get the money.
Right.
So in other words, that someone who opens up a 529 has an option. They could use it for their son or daughter's education
Yeah.
or not. There's that option. As soon as you see that option, you instantly know it's a 529.
Yeah. Yeah. I like that. Yeah, I think they could definitely, and I don't think there's, we talk about draws of the exam. And when talking about draws of the exam, I like to think of it as a probability, right? There's probabilities. There are some questions that are very low probability, may be there, but may not. There are questions that are very high probability. Everybody knows they're there. As I say, Brian, angels weep for you if you miss the question that we told you was there. So if we tell you it's there, and then you miss it, it's going to be a long day at the exam site. So I can't imagine a draw in which you're not going to be asked about a 529. Now,
that's right.
The other thing I would add to that, Brian, is that, I always sing the Test Geek's praises in terms of his practice tests, because there isn't ever a question on a Test Geek practice test that isn't there without thinking about probability that I've just discussed. And in other words, Brian isn't a test book vendor and is going to write a practice question on CAPM, for example, if it's not something that you may encounter. So, say, hey, I didn't see that on the Test Geek exam. I go, well, that's a hint.
Yeah, you're not going to have to calculate CAPM on any of my practice finals. I'll tell you that. Well, as a matter of fact, Dean, that's a perfect segue into our next section. The investment returns and the dreaded math that we've already been talking about for this entire episode definitely shows up on the test. There are ones that show up probably more likely than others. You mentioned one, Sharpe ratio. Do we have to calculate it? No. But do you need to know its components? Probably. I oftentimes told people, again, I like math. I put the formulas up there. I really do. And I say, you don't have to calculate it. But I think one thing is important is some of the synonyms that they could use instead of Sharpe ratio. We know it's the risk-adjusted return, right? So they try to fool you by kind of masking it with some of these synonyms. And I know from the formula that risk-free return, standard deviation, are always components. So sometimes, see, again, this is how linear I am. Yeah. Good thing or bad thing, I don't know. Yeah. That if I see in a test question, those two items risk-free return and standard deviation, I got a pretty good chance I know where it's going. It's going to the risk-adjusted return / Sharpe ratio. Again, it's like Dean said, it's most likely one of those definitional questions. It's certainly not mathematical. Dean?
I would add to that too that, and I'll see what your thoughts are. I usually tell people as well that higher Sharpe ratio is better. At the end of the
That's
day.
right.
So,
That's right.
because what Brian's saying, right? If I deliver, I usually use the story, Brian, of a beauty contest with a customer who gives Brian and I each $1 million and says, "Hey, at the end of the year, whoever gives me the best return gets my entire $100 million portfolio to manage." And Brian and I get the same return, and it looks like a tie. And Brian says it's a tie. The customer says it's a tie, and I say, no, it's not a tie. Let's look at our Sharpe ratios.
That's right.
And my Sharpe ratio is higher than Brian's. And that means I'm the winner because I delivered the same return with a lower risk profile.
That's
So
exactly right.
definitional, I would know that the higher Sharpe ratio is better.
Yeah.
Would I
Absolutely.
believe you? If you told me you had to calculate it? Absolutely
No
no.
way.
And then your math, we're probably going to have to do a podcast on math because Brian is very good at simplifying math. And he is a guy who likes it. And I don't know why, Brian, but when people see standard deviation, they freak.
Yeah, exactly.
So, I don't know why.
Exactly. How is it different from beta?
So, crazy.
See, there's a whole nother episode. We could be doing this until next Tuesday.
I usually try and use it. I'll check with you backstage, but I usually try and use a baseball analogy when I'm trying to discuss standard deviation in a way that people might understand it with, like using a batting average as a.
I love it. I love it. Anytime you want to include baseball in your lecture, sign me up. I'm in for it. Another one that I think this was an easy one. I think this is a gimme. Is the inflation adjusted return,
Definitely there.
also known as
Constant dollars is what I usually tell people,
real
or
return.
our effective return, or
real return.
There you go.
So again, they'll try to hide some of this instead of calling it inflation adjusted, which is kind of self-explanatory, right? They'll call it real return, where all you have to do is subtract the inflation rate. Now, where will we find that in a test question?
CPI.
Yeah.
Consumer Price Index.
And just subtract it from your return. And
I think people overcomplicate. I can't tell you. I got a pretty easy practice question I have people do as a kind of a warm up. And I can't believe how many people actually miss that because as a distractor, we throw in, I think their marginal tax rate or something, and they just freak out. They don't want to just simply. I usually use the All in the Family episode where Meathead is talking to Arch. Archie comes back from the factory and tells him he got a 10% or 5% pay raise. And Meathead says, Arch, CPI went up 10. What was Meathead trying to tell Arch? That he actually lost 5% in terms of a real return? Because what we're trying to overcome in investments is we really don't invest. I think when people, Brian, say, why do you invest? They say to make money. Not really, because I mean, so what if you make money, but it buys you less? What we're trying to overcome is taxation and inflation. And if we can overcome that, then we're moving towards our goal. And I held myself accountable, Brian, for that, a very low standard when I was a practitioner. But I would say, Brian, if we can overcome taxation and inflation, we're moving forward. And unfortunately, maybe I have to tell them your point about real return. Yeah, we got 8, but CPI was 10.
Yeah.
Now we're down 2. Right? So.
Exactly. There's a couple other investment return kind of questions. One, here we go. Mathematical question.
Yeah.
Where you actually have to calculate something. And it's oftentimes an
division.
That's exactly what it is too. It's an after-tax return. And it actually gives me a pretty good opportunity to reinforce the difference between yield and growth. Mm-hmm. Income, as received, of course, is taxable in that year. Your growth is not, right? The appreciation, unless you sell it.
Right.
So I can go into, well, what's yield? That comes from dividends and interest. Growth simply comes from appreciation. One will be taxed, one will not be until sold. So when they ask you to calculate this after tax return first of all, you have to know that the tax rate will only apply to the income and not the growth. And then, of course, you have to know it's income plus or minus the growth divided by your original cost. Sorry, there's your math problem. And it can show up on the test. It's one of the meatier math questions, I guess, especially if you're math anxious, that can show up on the test. Dean, what do you think?
Yeah, well, I'm right with you. I mean, I usually start by saying, listen, there's only two ways you're ever going to make money in an investment. The only two ways you make money in an investment is either income stream and or price appreciation.
That's
So
exactly
what I
right.
mean by and or, if there's no income stream, the only way you're possibly going to make money is through price appreciation. And then I usually say the capital gains tax is a transaction-based tax, and the easiest way not to pay it is not to transact.
Right,
So Brian's point, right? If we're just watching our portfolio going up, that's not taxable.
right.
Remember we have a cost basis where we turn our money into the security. And then the idea, I remember we talked about this, is that at some future date, we're going to turn the security back into money. But until we turn that investment back into money, that unrealized I approach it the same way you do, is not taxable. Right. And so that's a discussion. I usually tie it to, Brian, to like mutual funds as a disadvantage. Mutual funds are wonderful, but you give up tax control of your investments, right? Because it's the manager now that's deciding when it's time to head for the exits or turn the security. So I tie it into that as well.
Right.
And I agree that math is testable. And remember, so you're just going to figure out what the investment paid you, dividend or interest, and then plus or minus just what Brian brought up. And then remember, divide. You know?
That's right.
What do you
Divide the
think,
cost.
Brian, about, I don't know where you're going with the rest of the math. What about annualized return versus holding period return? No.
No, I used to go into that too much. I think it's superfluous.
Okay.
I don't know specific test questions.
Mhm.
Again, that one question about after-tax return can turn into technically 40 different lessons, right?
Yeah.
The income versus the
Right.
appreciation,
Right.
the after-tax, the pre-tax, the annualized versus holding period.
Right.
We can get into all of those things. And again, in the textbooks, they have a list of all of those
Brian, I
things.
miss some of these questions, practice questions, and here's why I miss them sometimes, because it's kind of a fine line. So we are
It
supposed to have a
is.
general understanding of tax consequence, but it's also part of NASA that we're supposed to refer you to the professionals. So every once in a while, we get questions on the test prep vendors practice question. I go, this is refer the client to a CPA or refer the client to an attorney. That's not what we do. I'm not your attorney. I'm not your CPA.
Right.
However, we have to have a general understanding of these things, like
That's
a
correct.
general understanding of business structures, LLCs versus S corps, a general understanding of the tax consequences. The way I say it, Brian, is we want to make sure that if our customer goes to a CPA or his attorney, that he doesn't tell them that their investment professional needs to be changed. Like, well, that
Right.
Dean guy, you need to get a new guy because he's obviously clueless about this. So a general understanding.
A general understanding of tax,
Yeah.
definitely. The ordinary income versus the capital gains, and it shows up on almost every exam you
Yeah.
take. To have that basic knowledge. I did a YouTube video just to kind of give a basic understanding of the difference between ordinary income and capital gains.
Right.
Right. Just so that people, I've done my own taxes, or had done my
Yeah.
own taxes since I was out of college.
Right.
And I needed to find that first tax deduction. I discovered the IRA, right? And ever since then, so I had a basic understanding of the difference between ordinary income and capital gains. And in our industry, it was the same thing. I remember customers asking me, "What's my tax?" I said, "Do you have a good tax person?"
Yeah.
Because we
I
can't
think,
give that advice,
yeah,
right?
that's right.
But we have
I
to
think of it,
have an understanding.
I basically think of it as, I'm a big fan of buckets. And so I think of it as three buckets. I have, me working for money, my, paycheck income, for lack of better, earned income. I have my money working for me. I call that my portfolio income. And then I have my third bucket, which is my partnerships, my distributions, my passive activity losses or passive income.
Right.
And so that's how I kind of approach it. And I think on the
Yeah.
test, the way I kind of approach it is to say we're primarily concerned with the second bucket. What the IRS, I call portfolio, IRS calls unearned income. What's happening with your investments, and how is that part taxed, and how does that connect to your return? Like the $3,000, I would know, for example, there's basic stuff there. Your
right.
point about the IRA, comes against your adjusted gross income.
Right.
A general understanding that a credit is not a deduction. They're different things. So, but it always, I don't know, Brian, when I was in practice, it always amazed me how many wealthy clients I have who would get so frugal when it came time to pay for help. Like the guy's got resources. I'm telling him, well, Dean, you referred me to that accountant or that attorney, but do you know what he charged? I go, yeah, because I use him. He charges a lot, but he's worth it. Why do you want to, why are you going to mess around? Particularly, Brian, if they're not capable of doing it themselves, or they, as we talk about, there's nothing wrong with intermediaries. I mean, Brian and I think of ourselves as intermediaries to help you pass your test. And I'm not one of those guys who bashes accountants and attorneys, because I think it's good to have an intermediary. I happen, Brian, to be a guy who tends to be a little litigious sometimes. And, on social media, I'm always accused of, well, he says he's going to have my attorney contact. I go, listen, I'm not threatening you. That's a real thing. If hey, Chris, you need to call this guy.
Yeah. Also, some other returns. One in particular, internal rate of return / expected return / net present value. One question. I like
Just B or go for it. You're going to try and get it right, or you're going to assign it to the universe?
I like to think I have a good explanation, but I can't do it here.
I think you do. I think I've heard it once, and I thought it was worth copper.
And like I said, I can't do it here. And again, it's one question.
Yeah.
Do you assign that to the universe?
I don't know. It's a hard call. I struggle with it. Brian is a little more shows a little more leadership with his students than I do, because I don't think I pander, but I think, okay, if you want to do it, I'll do it. I'm not spirit filled about it. I'm not going to pretend I'm spirit filled about it, but I do discuss it as it relates to yield to maturity and bonds.
Yeah.
And I try and give them an illustration or two. But again, one of the pivot words on the exam is material. Material is something that would, alter or something. And so, when we're telling you this, Dean says assign to the universe, I'm saying I don't think it's material. It's immaterial to your passing the test. If you think you can get the one question right, and it's, it's a point and play, and it's worth getting if you want to get it. But do you need to go down the rabbit hole of present value, future value? I usually, I do tell people about the rule of 72. I do, Brian, say in the math category, here's how I talk about it. Here's all the other math that we should be able to do: working capital, current ratio, quick ratio, get to total capital. If we get that math down, we have more opportunity to assign other math to the universe, including internal rate of return. But what about you? You covered, or you just telling me?
I do. And like you, I covered the balance sheet math. Everybody struggles with that. As a matter of fact, I did another YouTube video on just the balance sheet and said, look, this is important, because not just the corporate balance sheet, but then you have the customer's balance sheet.
Right.
And it's slightly different, and you got multiple questions.
Right.
The internal rate of return, net present value concept, you might have one.
Weren't you going to do a YouTube video on it or something? And you were
on internal rate of return and discounted cash flow.
Is that still coming at some point? Or
I have it in the can, as we say.
Okay.
But it's not currently for public consumption.
I think I saw you do something similar on a dry erase board, and I thought it was
in one of our live streams.
In one of our live streams. I thought, man, I
like it. And again, in that circumstance, it was probably appropriate, because you have Series 65, you have Series 66. And I think it's slightly more of an issue for 66 than it is for 65. Again, as you described, your buckets, right? This is a small bucket. It's a really small bucket.
Yeah.
But if I'm sitting home reading those wonderful, joyful textbooks and doing those wonderful, joyful 3,000 practice questions, guess what? I got 15 of them. So it sounds like, it feels like.
I would stress too, Brian's Test Geek Exam Prep LLC, his videos are an entire course on video. And whether it's Brian's course with the Guru 20 discount code, comes in about $100. Whether it's a live Kaplan course or STC or whatever it is. The other reason I highly recommend a class setting, live or video, is that also helps with that editorial decision about
Exactly.
if you're poor people doing self-study, it's really a challenge when you're doing self-study. If you are, I hope you're taking advantage of our live streams on Tuesday nights and our podcasts, because this is the way you're going to find out that it's not such a big deal. Otherwise, I always joke, if you don't, then you're going to think, well, it must be important because they spent so much time on it. They gave me so many questions on it, and you can get a warped perception of quantity, as we talked about earlier, and probability, right? 15 practice questions, you go, wow, it must be there. Not so much. Same on 7 with margin. I mean, they spend
Exactly.
so many pages and so many practice questions. It's like, if you were self-study, you go, man, this must be right up there with options and munis, because same page count, same practice question
That's
count,
right.
and it's not the case.
Again, if I may relate some of the inspiration I had in doing what I do today, having nothing but the textbook to first study and pass my exams way back in the dark ages, right? I always thought to myself, now that I've taken the test, now that I've passed the exam, right now I have to impart this on others. What would I have liked someone to tell me as I was preparing? Like, hey, this is on the test, and there's probably 3 or 4 of them. This one you might want to pay a little bit more attention to. This one might have 1. Man, it was nasty. I'm going to assign that one to the universe.
Yeah.
To me, it's just not worth the time, the energy, and the anxiety over something like this. So that was the inspiration and why I do what I do, right? And why I always, the mantra, keep it simple, stay with what you know, right? There's 3 things I care about: what's on the test, how it shows up on the test, and how you should answer it on the test.
Right.
And that's what inspires both of us, I believe, to do what we do.
Well, I told you, you're a little more on the straight and narrow than I am. I give myself permission to go
I
off
have
the
a little
rails
bit more spirituality, whatever you
I do
call
go
it.
off the rails every now and again and give myself permission. But your point, we want to make sure you don't take other people with
I
you.
get a little bit more intimate.
There you go. Yeah. I think Brian is so consistent. Even just before we started this episode, I asked him about something, and boy, you can count on, at least if you ask Brian 5 questions, at least one of the questions is going to start with the Socratic method. Is it on the test?
That's right. Exactly.
We were talking about, I remember what it was now. So now that you mention it, I'm not so sure.
Exactly.
The other thing, Brian, is that if we misled you about something that we say is not on the test, we would have people immediately calling us out and going, you said it wasn't there. And I had a guy call me out once.
That doesn't do anybody any good, does it?
Yeah. I had a guy who I told that he wouldn't encounter anything on variable life. And so not to worry about it. And he got a variable life question. I go, well, what can I tell you? You got a variable life question. And by the way, when he told me what it was really a camouflaged.
That's right.
Camouflage question. It wasn't real. I didn't want to hurt his feelings. Like, that really wasn't a variable life question. It was really more about that separate account, but oh well.
So that pretty much concludes our episode 3 of Series 65. I hope you enjoyed your stay with us. The guru, Dean Tinney, and the test geek, Brian Lee.
So episode 4, Brian, I just want to give them a preview.
Absolutely.
Episode
please,
4
I'm sorry.
It's going to be investment vehicles is episode 4. And we'll be talking about bonds and bond yields, investment companies open or close. That's big time test fodder.
Yeah, absolutely.
We'll see how much derivatives we could get done in that episode. It doesn't lend itself well to a podcast, but we can try it. And discounted cash flow. Woohoo. All right. So
topics, that's for sure.
Yeah. Well, maybe I'll pass it over to you for that one.
There you go.
So I do think that concludes it, Brian. Anything else you want to add before we?
No, I think that should do it. Again, thanks for joining us for episode 3, Series 65. Look for our episode 4 coming soon to a podcast player.
Yeah, just so you know, we're on Spotify, we're on YouTube. You can find it, you can Google it, and we always like to end with our little mantra. Mine is inch by inch. Your exam is a cinch, and Brian's is.
Stay with what you know. You take the test. Don't let the test take you.
All right, everybody. We'll see you for episode 4. Bye-bye.
Take care. Bye-bye.